Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.
Tonight, Goldman Sachs names Amazon as their top stock for 2022. And the Los Angeles Staples Center is being renamed to Crypto.com Arena in a 20-year deal. And Kyle Rittenhouse, the 18-year-old from Kenosha, Wisconsin, found not guilty on all charges. That and more tonight on Wall Street Wrap-Up. Hi, welcome to Wall Street Wrap-Up. I hope your week went well. I'm Andre Laborde. Our goal is bringing Wall Street to your street for today, for Friday, November the 19th, 2021, and to get you ready for the week ahead. Well, Thanksgiving is less than a week away right now, and Black Friday is exactly 1 week from today, and that gauges the Christmas shopping season. So just how healthy is the retail sector? Well, this week, over 40% of retail companies reported their third quarter earnings. Target stores posted the strongest year-over-year in digital e-commerce sales of 25% increase, but also had significant in-store traffic as well, with 95% of their sales were performed inside the stores. And Walmart turned in their second best third quarter, rising 8% from last year and 87% from 2 years ago in 2019. Lowe's digital sales turned the second best third quarter for them, rising 25% from last year in 2020 and 158% from 2019. Lowe's digital sales made up 9% for all their sales, and Williams-Sonoma is the parent of Pottery Barn. Their digital sales grew by 64% since 2019, and the e-commerce makes up 67% of their total revenues. And one more, Home Depot's e-commerce business increased last quarter, rising 8% from last year in 2020 and 95% in 2019. Well, tonight, speaking of retail, we'll be talking with Gerald Storch. Jerry is the CEO and chairman of Storch Advisors, but prior to that, he was the CEO and chairman of HBC, which is the parent of Hudson Bay Stores and Saks Fifth Avenue. He was also the CEO and chairman of Toys R Us, and he was the vice chairman of Target. What will the sales be like for the fourth quarter? And what's the future of mom and pop stores with the big box majors moving into every area of the country? Tonight, Gerald Storch will be with us in just a few minutes. But first, how did the markets do this week? Well, the Dow Jones Industrial Average ended the week down 1.3% for the week. And the S&P 500, they also closed down at 0.3% for the week. But finally, the NASDAQ, they finished the week up at 1.25% higher for the week. Investment firms Wedbush and Wells Fargo, they raised Home Depot to a buy and raised the stock price of Home Depot to $420 a share. And J.P. Morgan has raised Target's stock price to a new price target at $310 a share. Nike has announced that they're going to be increasing their dividend rate by 11%. So, well, let's get to our guest tonight. It's Gerald Storch, and he's here with us this evening. Hi, Jerry. Welcome to Wall Street Wrap-Up.
My pleasure.
Jerry, we're heading now going into the Christmas season at this time, and there are so many obstacles that are facing retailers, at this moment. But one of the good things, I think, is that people are now returning to work after being home for so long. Will this show well on the third quarter bottom line?
Most large retailers are doing fine right now. First of all, consumer demand is very, very high. Some of it's for the reason you just said, is that there's a lot of pent-up demand. People are coming out of the pandemic, we hope once and for all, going back to work, going back to school, going about their normal lives. And so there's huge demand for things like clothing that they were not buying during the pandemic, but frankly, for everything else in between. Mm-hmm. And we have seen incredible growth. If you take a look at the 2-year gain in sales, I like looking at 2 years because 2 years ago we hadn't even heard of COVID or coronavirus or anything. And so what's changed in the last 2 years, that's always good to look at. If you look at versus last year, that was the middle of the pandemic, the numbers can look a little funny. over that 2-year stack, sales are up about 20% in the U.S. across most categories. I mean, and it's very broad based, and so everyone's doing great right now. And if that were to continue through the holiday season, you would see a double-digit growth year on year, and that same 20% 2-year stack, which would be phenomenal growth.
Heading into the Christmas season, normally the fourth quarter, I would assume when it comes to retail and brick and mortar stores, this is their time of the year at this point. But with the supply disruptions that are going on, what do you think? How bad of a kink do you think this will put in their bottom line?
So again, you have to take a look at the big picture.
Okay.
Exports from China are up something like 30% over that same 2-year period I've been talking about. Sales in the U.S. have been up 20% over that 2-year period. So that's the pig through the python problem that we have in supply chain, is that it just doesn't all fit. So what these supply chain issues are doing is they're stopping that 20% from being the natural 30% it might want to be. Mm-hmm. But 20% is sure darn good. And what we're seeing is, because of some of the shortages, some of the key items, retailers are not having to discount the products. They're not having to have the deep sales they might have had in the past, because everything's just flying off the shelves, and you see a lot of empty spaces. So not only are sales actually up quite significantly, but these are heavily full price sales. They're not a big discount. So most retailers are doing really well right now. If you can't do well in this environment, you can never do well. Now, I'd say most big retailers, some small retailers, they are having just the toughest time getting their supplies. They don't have the capabilities of large retailers to charter ships from China or to do all these phenomenal things the large ones have been able to do to keep their stores, their shelves stocked.
Do you think that this year, specifically because of what you were just talking about with discounts, are you going to either see the discounts, or they won't be as deep as they normally are?
Well, I think there's still going to be a lot of good deals. The retailers have been planning for it all year, so they've been buying long, if you will, way in advance, things that they think will have a price point that you can't walk away from. So I think you're still going to see a lot of deals. The difference may not be noticeable to the consumer, but I promise you the retailers are having a higher margin going out of it. How foolish to sort of give away the store on Black Friday if you don't have to. And so I don't think they're going to. It'll still look pretty good. There'll still be some good deals, good things to buy. I think the bigger issue is how much will be bricks and mortar and how much will be e-commerce sales. During the pandemic, of course, we saw e-commerce kind of having 3 years of growth in 1 year, that kind of thing. Mm-hmm. Just phenomenal shift, a channel shift towards the internet that was capturing share anyway. As the economy has normalized a little bit, then you've seen a little bit of a shift on the percentage basis back to e-commerce, back to bricks and mortar, whereas e-commerce is still the horse to bet on if it's a long race. And so as we get to the holiday season, actually, over the holidays, e-commerce has tended to overperform as a percentage of sales. I don't think that's going to happen this year. I think you're going to see bricks and mortar have a pretty good holiday.
There's something about going to either to the mall or just to bricks and mortar stores. I mean, people want to be around other people. And there's one thing where like you were talking about e-commerce, where either you don't have the time because you're working or such, so you order it. But there's another thing where you want to go out and just be around other people. And I'm curious if, like you said, after being cooped up for the last 18 months or so, that people will want to just go out and be around others to make those purchases.
A lot of retailers are reporting during this period, and I think the numbers are going to be pretty darn good across the board. All ships are rising as the water level is rising here for retail. If someone doesn't do well now, then something is really wrong with them. Yeah. This is the big chance for some of these retailers that have been struggling to put some cash on the balance sheet.
Yeah. Are the supplies going to be there, though, for people to, when they do go to the brick and mortar to purchase? Because I would have assumed, and correct me if I'm wrong, that you can only store so much inventory at the local areas, no matter what area you're watching is from right now. And then you've got your supply chain from your warehousing.
So there's plenty of goods out there. There's plenty of goods to be driving that 20% 2-year stack in same-store sales. I mean, think about that. In a normal year is considered a good year if sales are up 4 or 5% versus the prior year. What I'm telling you is that over the last 2 years, sales are now up 20% in that 2-year stack, which comes out to a 9 to 10%, per annum increase, more than double a normalized rate of growth in a normal year. So there's plenty of goods out there to drive that. What you're having is the ultimate opportunity is being chopped off by the supply chain. Won't tell you that if you want to buy a specific hot toy for Christmas or a hot gaming system or the specific television that everyone wants to buy, I'm not going to tell you can find that. Or the car you want. Gosh, there's a big problem with cars, right? With the chips being in short supply. I'm not saying you're going to be able to buy exactly what you want. But when you go to Target and Walmart and Home Depot and Costco and Lowe's and TJ Maxx and all these retailers that have been performing really well, they're going to have plenty on the shelf. You may not get exactly the gift that you wanted, but you'll walk away with something. Don't worry about it. There'll be plenty to sell. And the retailers have said as much. They came out just this week in a kind of orchestrated show with President Biden and said, don't worry, the shelves will be full for Christmas, the biggest retailers.
When it comes to inflation, I mean, it's moving so fast. The cost. I was watching the CEO of Hanes Brands just about a week ago, and he was saying that his sales are doing good, but cotton is at a 10-year high right now. So is that hard for retailers to price in? You've got the cost of inflation, you've got the cost of now labor, and now the cost of maybe possible transportation disruptions. When it comes to, like what you just talking about just now is, you're getting the products from the warehousing to the shelves to into your hands as a retailer. Is that a difficult thing to calculate?
Well, it's not difficult for these large retailers to do correctly, but sometimes they don't. Mm-hmm. And when they don't, then they just blame the overall environment. But I have to tell you that the current inflationary environment, which even the most recent report was something like a 6% year-over-year rate of inflation, is totally manageable by retailers. And in fact, generally a good thing for the bottom line of the retailers if they manage it. Because what they do is they raise prices. And the consumer has shown a willingness at this point to pay those higher prices. So the retailers raise the prices in anticipation of these cost increases and actually make more money. There are some big expenses retailers have that are sticky, that don't go up as fast as inflation. I would highlight rent, which is a very big part, the occupancy cost of a retailer, very big part of their cost structure. And those are negotiated over a multi-year basis, or people own the stores. And those don't go up very rapidly, even in an inflationary environment. And so retailers tend to make a lot of money in inflationary environments. It's actually harder to figure out the P&L when there's no inflation at all, because if you don't sell more units, you don't make more money in a non-inflationary environment, and selling more units carry all kinds of costs. But think about the fact that if the cost of an item is inflating in and of itself, a lot of the costs associated with that item, are fixed per item. So for example, you still have just as much labor hours going into moving that single item. The rate may go up, but not the hours. So the ultimate retailer sells one giant thing for a huge price and has very little expenses associated with it. So a certain amount of inflation is good as long as it doesn't start to dampen consumer demand, which we have not seen yet. I want to emphasize that. Have not seen that at all. Far from that, consumer demand seems incredibly robust.
What about labor? I know Macy's is saying that they're going to be raising their hourly rate to, I think, $15 an hour. I know Walmart has stated that they're going to be raising their hourly rate because the worker is in fast demand. Do you think that there'll be a problem with retailers with brick and mortar stores and also online as well, too, when it comes to labor shortages?
Whether that's on the retail floor, whether that's in the distribution center, whether that's for truck drivers, whether it's in the factory floor, there's an issue overall where this economy is superheated and there isn't enough labor to go around. I think some people, you'll hear people saying all the time, oh, that's because the government paid them not to work. There's some truth to that. That's one part of the equation. But I think people have also been frightened to go back to work. So when you see who hasn't been working, you see it's a lot of women in two-income households, and I think there's been a lot of fear associated with why people haven't gone back to work. It's kind of that people who are almost on having that discretionary extra job are the ones that are missing. I believe as the Delta wave starts to disappear, and if this is really the last time we have one of these big coronavirus spikes, you're going to see more people return to work. And as we turn the corner into the new year, I believe a lot of these issues are going to abate. Keep in mind, there's a huge difference in the amount of goods you're trying to move through the supply chain leading up to, in the third quarter and leading into the Christmas time in the fourth quarter. Huge difference from that volume of goods, but then what happens right after Christmas and beyond. So I think that's when it's going to start to equalize or normalize. Capitalism really does work if you can let it work. We've had a lot of forces that have not let it work. I mean, chief among them clearly is the coronavirus and actions taken by the government, both good and bad, depending on what your view is. I won't get into it. But inflation's not going away soon, because keep in mind what we've been talking about. People are raising those prices in anticipation of inflation, because the worst thing as a retailer, as anyone, is to get caught in the other side of that equation, where you're raising the prices too late and all your costs have gone up. So they're saying, I'm going to raise them now. Everyone expects it anyway. And as long as you're going to take the price increase, I'm going to pass it on. I'll put out great statements. You hear all the time. We really tried not to pass it on to the consumer, but we had to in the end. Well, I think they're going to do it before they have to. That's the smart move. Do it in anticipation of the cost increases. So inflation's going to start to spiral here. As long as it stays 5-6%, the economy can handle it. If it starts getting closer to double digit, some of us remember those days when we had that in the past. That's not good. That doesn't work.
What percentage do retailers look is for their sales for the holiday season to make it during that late November, December period? I mean, by that I mean, is there 30% of their sales or 40% of their sales?
Of course, it depends on what business you're in. If you're selling Christmas trees, it's 100% of your sales.
You don't sell many snowballs during the wintertime, right?
That's right. I used to run Toys R Us. I was chairman for Toys R Us for seven years back years ago, and that was a heavily Christmas-oriented or holiday-oriented business overall. If you're at Target, Walmart, Costco, these folks have been doing amazing all year. Certainly, there's more. The fourth quarter is the largest quarter, but it's not everything, and it's more profitable than other quarters, because given, again, what we've been talking about, the high fixed cost load that's in a retail business, the more volume you push through, the better you do. So it's more profitable in the fourth quarter than any other quarter. But for a big diversified retailer, if you think, instead of 25% of the sales, which would be exactly a quarter, maybe it's 30 or 35%. It's easy to get it blown out of proportion in your mind as well. But if you're selling Christmas trees, toys, cashmere sweaters, then fourth quarter is what it's all about.
If you're just joining us right now, we're very happy to have Gerald Storch with us. Gerald, former CEO and chairman of the board of Toys R Us. He's also the CEO of Storch Advisors. We're going to take a break, but don't go away, because we'll be right back. If you're just joining us right now, we're happy to have with us Gerald Storch. Gerald is the CEO of Storch Advisors. We're talking about retail. Gerald, just recently, last week, DoorDash just made a major purchase in Europe of another one of their competitors. They've acquired them. DoorDash is saying that they're going to be moving from also into food delivery, but also clothing and such. You're looking at people, because of their work circumstances, maybe not being able to actually get to the mall, but having someone deliver it to them, in addition to online shopping. How do you see the face of retail changing?
Well, one of the dirty little secrets, maybe, or maybe it's not a big secret if you really study the P&Ls, but of these delivery companies, is they don't make any money. It's really expensive to deliver to people's homes. And so, forget, you adjusted EBITDA, look at their P&L. Do they have a profit, in the traditional sense on the bottom line? And the reason why it's so difficult to do it is that that last leg is just darn expensive. To pick up a meal at a restaurant and deliver it to your house, that's enormously expensive. And somebody's got to pay for all that. And so the reason why they're trying to deliver more than just food is because they're trying to increase the density of that delivery route and the value delivered each time they start a route. So what they're trying to do is to make it like a daisy wheel, where they go around, stop at every house on the block, And if they can do that and leave enough value at each house, and one may be a pizza, and the other one may be, maybe a Mexican food, and the next one may be a suitcase or some clothing, or the next one may be a shovel. I don't know what they got from a different store. Then they might be able to make the economics make a little bit more sense. So, and by the way, the same thing's true from a standpoint of being green. It's pretty ungreen to make one trip from a store in a car and drop one thing off and go back to the store and get the next thing and go back and forth. Whereas they can drop a lot of things off in one trip, then it's at least much lower carbon footprint, which everyone's focused on these days. So it is inevitable, whether you're DoorDash or on the other, a very interesting comparison, if you're Uber. Uber, generally got into business to deliver people around, and they're trying to deliver meals and everything else they can do on their routes because it's the same principle. If we're going to have everything delivered, how are we going to make that affordable to do that delivery? And Amazon has lost money for years and years and years and years. And finally, they've essentially, look, who doesn't see the Amazon truck? They stop at every house in the neighborhood, right? The only way is to make that more economic. And the only way to make it more economic is to make a lot of stops close together at high value every time you go out. So that's what's happening. And it's inevitable. And eventually it will happen. And you're going to see this inflection point where it starts being as profitable for the retailer to deliver it to your home the same day as it is for the retailer today. When you go to the store and pick it up yourself and take it home yourself, and again, every retailer knows that they have this negative arbitrage where if the consumer comes to the store and picks it up, on the margin, they make a lot more money than if they have to ship it to the consumer.
Sure. And also, if the consumer goes to the store to pick it up, there's a great chance that they'll go ahead and pick something else up as well. Besides, they'll buy more.
Oh, for sure. But again, they're trying to emulate that. If you go to websites, people who bought this also like this. Here's something else we have in mind for you. So the theory would be that eventually the artificial intelligence is going to get so good at what they offer you when you're buying something that it's an irresistible impulse purchase, just like it is when you're in the store and you walk by an end-of-aisle display and it's just irresistible to you. You throw it in the cart. I don't know if they'll ever get there, but that's what they're trying to do, is let the artificial intelligence and the logic and all the knowledge they have of you, by the way, from their appropriation of your personal information, to offer you just the perfect offer when you're online that's going to create that or going to simulate that impulse purchase you have in the store.
True. What about, I know Walmart has made great inroads with selling groceries as well. You were former vice chairman of Target. Do you see other major stores, and I'm thinking of Target or someone else, going into the food business as well too? Because I don't know what the margins are in the food business.
Sure.
Is it worthwhile?
Yeah. Target does have a food business. I actually started when I was at Target, by the way. And we have Target super centers in some cities that have full-service grocery stores, or Target has, as well as most Targets have a very large food section right now. The reason that you have food in a store is because it's the most frequent purchase. Most people shop for groceries once or twice a week. Most people go to a Target or Walmart store only once or twice a month, so much less frequent. So the idea would be the food causes you to make that extra trip for food. And when you're there, you get that impulse purchase we've been talking about. You go, well, as long as I'm here, I might as well buy, a bathing suit or whatever. That would be the theory. A much higher margin than the food carries. So everybody tries to carry a little bit of food. Dollar General, dollar store is looking at expanding its food assortments, for example. So most people try to. Walmart doesn't just dabble in grocery, though. I want to point out they are the largest grocer in the nation by far, and they have done most of their e-commerce growth has actually been growth in grocery, both pickup and delivery, and pickup at the Walmart Supercenter. You go there and you get the grocery, and they are the dominant grocer in the country. And Amazon has for years admired that and envied that. That's why they bought Whole Foods and tried to build that into their template for expanding in grocery. But they bought the wrong grocer, I always say, because Whole Foods is not in every market. There's no Whole Foods anywhere near where I live, for example, today. I know there's Whole Foods in New Orleans there, in Metairie, but you can't get to every trade area very rapidly from Whole Foods. There just aren't enough of them. And it's kind of a niche grocery. It's kind of expensive. It has this kind of natural foods things that appeals to some people and not to others. And so they bought the wrong grocery. And as a consequence, Amazon's kind of stymied in grocery and has not been able to take the share from Walmart. It's been the other way around. There's a Walmart within striking distance of everyone. If you want that fresh food, the best way to deliver it is from a grocery store that already has the fresh food there. Amazon is struggling because a lot of their distribution centers don't have cold capabilities. They cannot deliver, frozen or cold food. And Whole Foods is just too far from a lot of people. So this has been a battle played out between the two giants in American retailing, Amazon and Walmart today, that Walmart has been winning.
When it comes to the mom and pop stores that are not do not have 2 and 3 locations, do you see that the viability and the future of them are going to be continuing with the majors going in now in so many cities?
The mom and pops that don't offer anything different or special, except higher prices, because a lot of them are high priced, they're not going to survive. A store, as an independent store, can survive and do quite well if they have a point of view that's distinctive, if they offer merchandise you can't get anywhere else. Think of some of your favorite stores where you go and they have collectibles that you can't find anywhere else, or where they have a curated point of view that makes you feel special that you're there, or that I'll never find this anywhere else.
Certain niches.
Whether that's totally true or not. They sure.
Yeah.
You have to be differentiated in any business to succeed. And for a small store, that differentiation has to come in the assortment. They can't offer the same thing, for gosh sakes, that you can get at Costco or Target or Walmart, because they'll never be able to offer at the same price.
I hope you come back.
Sure.
Thanks, Jerry. Gerald Storch. Well, if you've got a question about finance or a comment about the show, we would love to hear from you. You can always write us at andre@wallstreetwrapup.info. Keep it pithy or concise, and we'll be glad to answer your questions. And now for a look ahead for next week. But first, it was on this day in 1928, what character made his film debut as Mortimer? We'll have that answer in just a minute. Well, on this day in 1928, what film character made his film debut as Mortimer? It was Mickey Mouse. On this day in 1928, Mickey Mouse made his first talking cartoon in Steamboat Willie. Well, we've got some great guests coming up in the next few weeks, and we'd love to have you with us. We'll be talking with Thomas Hoenig. Professor Hoenig, in addition to formerly being the vice chairman of the FDIC, he was also the president of the Federal Reserve Bank of Kansas City and a sitting member of the FOMC, who decides what interest rates this country should be paying. It'll be an interesting conversation on inflation, interest rates, and the exorbitant debt that we're accumulating and some say now drowning in. And also coming up in a couple of weeks, we'll be talking with the former NATO commander of all Afghanistan forces, General David Petraeus. General Petraeus was also former director of the CIA, and as you can tell, there's going to be lots to discuss. Well, the FDA this week has authorized both Moderna and Pfizer's COVID vaccine boosters for all adults, which leads us into our next guest for next week, because next week we'll be talking with Wall Street Journal reporter Greg Zuckerman. Greg has just written a great book called A Shot to Save the World. It's a book on how Moderna and Pfizer pharmaceutical companies came up with a vaccine. Greg Zuckerman will be here next week. And as a reminder, we repeat the show on Sunday mornings, but always the best way is to set your DVR so you'll never miss an episode. And that's our show for Friday, November the 19th, 2021. I hope you've enjoyed it. Thank you for Gerald Storch joining us this evening, as always, but we appreciate you for allowing us into your homes tonight. Remember, you can always follow us on social media, Facebook, YouTube, Twitter, and WYES.org. So I hope you have a fun weekend and a productive week ahead. I'll see you next week. For Wall Street Wrap-Up, I'm Andre Laborde. And remember, money never sleeps. Good night.
Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.